Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the January 18th edition of Basis Loaded with Joe Schmit. I am Joe Schmit, host of the show, and I don't know if I mentioned fantasy football champion. We are emerging from the deep freeze here in Chicago all the way up to a balmy 20 degrees Fahrenheit. What better way to celebrate than with the latest from the NDPSR report? Let's start with butter. This butter number came in at 264.47. That is a flat basis to the CME 1 week at 264.88. That was a high week at the CME prior to moving a dime lower. So you would expect lower than normal basis, and that's exactly what we received. At that flat basis, the manufacturer looks like they sacrificed price a little bit to move weight. Big volume here on the NDPSR, north of 4.7 million pounds. That includes the 15 loads that we traded at the CME last week, as I said, at about an average of $2.55. So high move at the CME, extra volume on the part of the manufacturer, also loads at the CME at a lower than the benchmark level. All that adds up to a flat basis, which is what we received. However, the manufacturer was able to move good weight. So all in all, I'd have to call it a win for butter. Up next is cheese in the blocks, 150.98. That represents a plus 8 to the CME 1 week average of 142.63. Now, this is the last week for the CME in the low 140s. Manufacturer was like, we're not ready for that price level. Held out for higher values, which they received. 8 over is well over our expected 2 to 4 cent positive basis. However, volume suffered a little bit. You'll notice that this is the third week in a row now at around the 11 million pound mark, well below our expected 12.5 million. We traded 24 loads at the CME last week. Even that didn't help the volume here on the NDPSR, still coming in short of 11.6. So really nice price in the block. However, volume suffering. In the barrels, 148.07. That is a plus 5.5 to the CME 2 week average of 142.56. Basically parity in the CME averages on the blocks and barrels in that low 142 level. Here on the NDPSR, the blocks carrying a 3 cent premium, as you would expect. 5.5 is right in the middle of our expected 4 to 6 cent positive basis. We traded 42 loads at the CME last week at essentially a 146 average, which is, of course, 4 cents above the 2-week benchmark. So that could be a little bit of the reason why we have this elevated basis. However, we were expecting 4 to 6, so just at the high end of the expected range, basis probably a little bit lower than you would have thought. And even at that basis level, the manufacturer is still only able to move 12.4 million pounds. So about 1.1 million under our expected volume threshold, middle of the road basis in the barrel on lower than expected volume. Certainly nothing to write home about there. In whey, 43.09. That represents a plus 4.5 to the CME 1 week average of 38.38. But of course, in whey, we're talking about the December 30th NDPSR level. We were back at 41.09 on December 30th. Sales based on that benchmark sold 2 cents over at 43.09. So the manufacturer was able to call a 2 cent premium over prior week's NDPSR, as the sales on this report occurred last week. Last week, the prior week's NDPSR was 41.09, that December 30th number. 2 over is a nice number, and the manufacturer is still able to move north of 4.6 million pounds. We only had 2 loads traded on the CME last week, so not a lot of help there. 4.6 million pounds at an elevated basis level. Certainly a win for the manufacturer, and the whey market still proving that it has legs, despite the recent declines that we've seen at the CME. And then lastly, non-fat 120.71. This is a very nice price. That's a +4 to the CME 1-week average of 116.50. We traded 11 loads of non-fat on the CME last week. That 11 loads didn't really translate over here to the NDPSR 15.8, well below our expected 20 million pound level. So the manufacturer was able to call a 4 over positive basis, but sacrificing volume at that level. So this is week 2 of 4 of the January pricing cycle, currently getting a January class 3 of 15.17, January class 4 up at 19.30. If you carry current CME equivalents out through the remainder of the Feb pricing cycle, this of course is the first week of Feb pricing at the CME. If you carry current prices out through the remainder of the 4-week Feb pricing cycle, getting February class 3 15.28, February class 4 19 even. We'll see what they have in store for us in the weeks to come at the CME. Until then, on behalf of Paige and the entire EverAg Insights team, thanks for joining us. Take care. Stay warm out there. Bye.